Greetings, everybody. Welcome to Liberty Call. Today is Thursday, March 23rd, 2023. Hope everybody's having a fantastical day out there. I just spent like the last hour and a half cleaning out my garage. That's a lot of fun because the woodland creatures like to get in there and make a mess. And they get into boxes and stuff and make just a giant disaster. So cleaned everything out and swept and vacuumed, got the wet dry vac out and vacuumed up all the gross crap out of the corner. So that was a lot of fun. So I'm all showered and clean and smell pretty good. So, all right. So if it's your first time watching Liberty Call, please give me some thumbs up. These little thingies right here. Woohoo! Likes, shares, subscribes, follows. I don't know what else is out there. This goes out to a lot of places. So not the best day in the markets, unfortunately. Well, it was, I guess it ended okay, but actually, let me bring up my chart here and we can look at, share that. And here's the Dow 30 today. And you can see it was up really strong in the morning. We were up 400 plus 460 points. And then about, I'd say about 11-ish Eastern, it just started to fall and got as bad as down about 130, 140 points in the red. And then finished the day off, 75 points in the green. Same thing with the S&P 500, basically virtually the same exact chart. NASDAQ's looked similar, but it never went into the red today. So anyway, it was a strange day. I thought, not that I think the long-term trend is going to continue or things are, in a bullish situation right now. I'm definitely a bear currently based upon everything that's going on right now, but wow. All right, well, let's go ahead and jump into the numbers and see how everything turned out for today. The Dow Jones was up 0.23% or 75 points, closed at 32,105. S&P 500 was up 0.3%, closed at 39,48. NASDAQ up 1.01%, closed at 11,787. VIX was up today 1.57%. It's currently holding at 2261. I think it was up about 5% at its peak today. Canada was down 0.37, Brazil down 2.29, Mexico up 0.53. Jumping across the Atlantic, Germany was flat at down 0.04, UK down 0.89, France up 0.11, Netherlands up 0.24, Spain down 0.44, Italy down 0.16, Switzerland down 0.59, and Portugal down 0.54. Russian exchanges were split today. MOEX down 0.23, RTSI up 0.96%. And the overnights in Asia, mostly green, starting out with the Nikkei in Japan. It was down 0.17, Australia down 0.67, New Zealand up barely 0.01%. Chinese markets are all green. The Shanghai up 0.64, Shenzhen Component up 0.94, China 50 up 0.68, the DJ Shanghai up 0.64, Hang Seng up 2.34%, Taiwan weighted came in up 0.66%. All right. So like I said, I guess people are, yesterday was kind of weird. Everyone was on pins and needles. What is Jerome Powell going to do? Is he going to raise rates? Is he going to pause? Is he going to lower rates? Is he going to do more quantitative easing? Basically just said, hey, we're going to stay the course. I didn't listen to his entire thing, but, the gist I got from it and from the multiple articles that I've read since then, basically he's planning on, sticking with the plan for now. Again, we'll see how much heat he gets in the next couple of months when the dominoes start to fall and things really the wheels really start to come off that cart. We'll see if he turns chicken, which I think he will. I don't think, again, he's a government employee. They're all spineless turds. So, all righty, let's go ahead and jump into the market recap. S&P 500 pairs gains as regional banks stutter to offset tech climb. All right, get my notes. On Thursday, the S&P 500 saw a reduction in gains as energy stocks slipped and regional banks returned to the firing line. First Republic Bank resumed its wobble, and this had an adverse impact on the broader financials. Treasury Secretary Janet Yellen, who, if you watch this regularly, I think is the dumbest human on the planet, said that the government would step in if needed and bring stability to regional banks, but the slip in banks persisted. Energy pushed the market lower, with Schlumberger leading to the downside as oil prices cut gains. Treasury yields fell again as the Fed is likely to pause and eventually pivot sooner rather than later. See, there it is, right there. Sooner rather than later, as tighter lending conditions amid stresses in the banking system will help cool inflation. The Fed hiked rates yesterday, forecast one more hike this year, and ruled out the possibility of cuts. But markets are not convinced. Again, the people in the markets think that if they can apply enough pressure, enough whining, crying, maybe some short selling to make things look bad, hey, we can get the easy money that we've had the last more than a decade. Let's see. The odds of a pause at the next meeting jumped to 55% from 31% the prior week. Tech stocks climbed with Meta Platforms, Apple, Microsoft, and Google retreating from session highs, but remained in the green. Social media stocks were also in focus amid a potential ban of rival TikTok in the U.S. TikTok's chief executive, it's going to be hard, Zhao Zichu, the Chu part's easy, is on Capitol Hill to deliver testimony before Congress as lawmakers mull whether to ban the app amid concerns about the app's data privacy and possible connections to the Chinese Communist Party. Yeah, because the U.S. government is so honest and trustworthy. Please. The U.S. government is the biggest gangster terrorist organization in the world, and the fact that we put up with it as citizens is ridiculous. I mean, personally, I wouldn't mind, getting 1 million people, maybe 2. Let's storm the Capitol and take them all out. But sorry, hey FBI, if you're watching, there you go. All right. Wedbush said if TikTok and ByteDance decide to fight this and potentially get banned in the U.S., the clear beneficiaries would be Snapchat, Meta, and Facebook. The slip in rates didn't provide relief for cryptocurrencies as sentiment was soured by reports that Coinbase will be sued by the U.S. government for allegedly listing unregistered securities. In other news, Block fell more than 16% after short sellers. Heidenberg accused the digital payment company of facilitating fraud and misleading investors. On the economic front, weekly jobs claims continue to show strength in the labor market, with economists flagging the ongoing lack of labor supply. Jeffrey said that labor supply is not increasing in any meaningful way, and there is no evidence that this will change anytime soon. All right. So again, sounds like the Fed is, for now, sticking with their plan. Sorry if I was offensive a minute ago. I find it hilarious that our government is upset that China might be invading the privacy of American citizens. The NSA has been collecting all our data for years, decades now. They'll throw people in jail for protesting abortion clinics. Again, it's just everything is so political these days. Don't get me started. All right, next up, gold has had a really nice run. Gold returns to 2,000 as dollar descends into post-Fed abyss. I'm on a conference call, or not a conference call, a stream. Sorry. All right, where my notes go. The U.S. dollar has fallen and gold has surged to 2,000 per ounce on New York's COMEX as investors flock to the precious metal. The Federal Reserve's move to rate hikes The Federal Reserve's move to hike rates by another quarter point, but hinting at a potential pause in the hiking cycle, triggered speculation that the central bank might just do one more hike. The move will spell doom for the dollar, while it will be hugely positive for gold, which is a contrarian trade to the U.S. currency. The U.S. dollar fell after mixed messaging on the outlook for rates by the Federal Reserve, which raised rates by another quarter point at its March meeting. Central bank reiterated its commitment to bringing down inflation and not cutting rates, at least for this year. The Fed has raised rates 9 times over the past 12 months, adding 475 basis points, or 4.75% for normal people, to rates, which were slashed to just 25 basis points in the aftermath of the coronavirus pandemic that broke out in March of 2020. Yeah, but rates had only gotten back up to like 2% in 2019 before they started cutting rates at the end of 2019 because the repo markets within the currency exchanges were all jacked up. So again, I was talking about it back then, but no one was listening. Let's see here. 2 days. Let's see. Gold reigned upward momentum after a 2-day slide as the dollar index, which pits the U.S. currency against a basket of 6 competing majors that includes the euro and the yen, continued to journey south. Gold is becoming a favorite trade on Wall Street as many Traders remain nervous post-Fed and over how quickly U.S. authorities will be able to contain further banking turmoil. Yeah, I was a fan of gold 3 years ago when all this stuff started. I was saying that when whether or not we have a debt crisis or a dollar crisis, those are the two things that are going to bring down the republic. I don't think we'll ever have to bring any arms up against the morons in Washington because it's all just going to crumble down. I think that's probably the easiest and most bloodless way to take back, our liberties and freedoms from this tyrannical DC empire that we live under. But, until that happens, I just, again, until people are starving, they're not going to do anything about it. All right, last article here. U.S. labor market still tight. Housing market close to bottoming out. I wonder how they know that. The number of Americans filing new claims for unemployment benefits dropped slightly last week, according to data released from the Labor Department. The fall in claims suggests March could be another month of solid job growth, and the report is viewed as the most timely data on the economy's health. Persistently tight labor market conditions have led some economists to predict the Federal Reserve will raise interest rates twice more this year, despite the bank signaling it was close to pausing its monetary tightening campaign. With 1.9 job openings for every unemployed person in January, employers are generally reluctant to let go of workers. However, labor market conditions could loosen following the collapse of two banks, which has led to tightening in financial conditions that could cause banks to become more strict in the in extending credit, impacting households and small businesses that have been the main driver of job growth. The Fed has raised its policy. Yeah, we already know about that. I think that's about it. So, yeah, the labor market has certainly been improving. Let's see here. The forecasts. Where the numbers go? Yeah, for initial claims, benefits fell 1,000 to 191,000, and let's see here. They had forecast for 197, so that's pretty good. And let's see here. Was there any other data? Oh, they were also talking about the housing units. Again, they seem to think each month that we have a kind of a bottoming out, that this is the end. But again, I don't know. I think it's probably going to get worse before it gets better, folks. So we'll see where it goes. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a great evening, and I'll talk to you next time. Adios.